Hey everybody, welcome back. And we are sharing with you today how to fund the purchase and rehab, all the ways that you can fund your purchase and rehab project. Okay?
So yeah, there's not just the traditional banks, right? We don't typically use traditional banks for anything that we do. We have started using what's considered a hard money lending bank just more recently, but we've done lots of projects where we haven't even used that. So we're just going to talk about all of the different ways that we have funded things and other ways that are, that are out there for everybody else to use as well.
And why don't we use banks usually, Annie?
Because banks are a pain in the butt.
Banks also require...
No, they require money down, and we don't typically use any of our own money.
Yeah, they require the most amount of money down. And we are trying to buy as many properties as we can. So, if you buy $100,000 house and you need $20,000 down plus closing costs with a bank, you could get potentially a hard money loan with no money down or even 10%. So if you only had 10% down instead of 20, then you could buy 2 rehab projects at once with a hard money loan as opposed to using a bank.
And listen, when we first started, we were using traditional banks.
Yes.
We did traditional bank loans, and that was the only way that we knew how to do real estate when we first started back 2 decades ago.
Yeah, 20 years ago.
But now we have different opportunities and options, and that's what we're going to share with you, because traditional banks are an option, but they limit you on how many you can do at a time or overall even. And obviously it's connected to your personal credit. And, we just do too many projects to even worry about traditional banks, to be 100% honest. So,
right. Okay. First way, cash, right? Cash is king. If you have it, put it to work for you. Cash offers are strong on contracts. Some of our students even have bought with cash and then refinanced with a bank loan after they finished it. So there's lots of different options, but obviously if you can put a cash offer on your contracts, if you're in a multiple offer bidding situation, that's always going to look the best.
And if you don't believe cash is king and you think the American dollar is failing, go to Florida right after a hurricane and see what you can get with your credit cards or your debit cards. A whole lot of nothing, because nobody had any service, nobody had any Wi-Fi, nobody could do anything unless you had cash. And cash obviously can work too, but it doesn't have to be yours.
True. And we're going to cover that in the next slides.
Yep. An old 401k. If you yourself have a 401k from a job that you used to have, which a lot of entrepreneurs, start out in the business world working for somebody else a lot of the times. So they have a 401k or a retirement plan that they can use, set it up as a self-directed or converted to a self-directed. If somebody else has a retirement plan that they're willing to let you use as investment money, you can set that up as a self-directed so that they can just write you a check or have the trust company forward you the money or whatever the case may be.
Yes, this is actually one of the main ways that we utilize other people's money, private money loans. And so this can be, if it's your 401k and there's no approval requirement, you could certainly put cash down. If your lender has to approve your deal and they're going to make you do an appraisal or anything like that, then I would not recommend that you put cash on your purchase contract. Put that it is private money and it's contingent on your lender just approving property. You're approved. It's just,
but the property has to meet the requirements.
Yeah, the property has to meet the requirements. And typically our requirements are just, again, on $100,000 property, say it's worth 100,000, we want to fix it and repair it for around 65 or 70,000. So we want to be all in at 65 to 70%. Otherwise, you don't make any money on your flip. So you got to make sure you purchase it right. But we have included a couple of names here of companies that are smaller and easier to work with. Quest out of Texas is a great one. Kingdom Trust, I think they're now based in Wyoming, but they do have an office in Kentucky. Those are two IRA companies that we know, like, and trust, and we use them a lot because they do transactions quickly.
Yeah.
Some of the IRA companies are slower, and it's almost like dealing with a bank in order to get the funds.
Yes.
And
If it's self-directed, it's typically the individual that owns the 401k has a checkbook access, so they just literally write you a check, or they have to get approval from their custodian at the company, and Quest and Kingdom Trust tend to turn it around quicker than anybody else. And by quicker, I mean a week or two instead of 60 to 90 days.
Or even a couple of days sometimes.
Just depends.
Where someone like Equity Trust or Entrust may take, like Annie said, a couple of weeks even to complete that. So we will provide a few contacts for those companies that you guys can utilize.
Another option is if you have a whole life cash value policy, or if someone else has a whole life cash value policy, that is life insurance, and it has a additional cash rider so that you can take a loan out against the money that you have paid into it.
Yes.
It does not affect the amount of life insurance that you have as far as coverage is concerned.
No.
It just basically is the additional money that you have paid into it, and it has provided a 5% return on your money.
Yes, typically.
So then you can loan it out to yourself or to others to invest or to buy a car or whatever the case may be. But since we're talking about fix and flip properties, we've used it to do just that.
And the same, like Annie said, you decide the terms, the payback terms. So on one of these deals, you could say, okay, I'm just going to pay it all back at the end. I'm going to do monthly payments. And that's the same with the IRA 401k money.
Right.
If one of your contacts, one of your investors, business partners, whatever the case may be, wants to provide funds for your deal, you can decide, okay, we'll include monthly payments or we won't. We'll add it all up at the end and then add it to the amount that was loaned.
So the payoff for the loan would be all of your interest throughout the life of the loan added to the payoff.
Yes. So as an example, if you had $100,000 loan at 12% interest, that equals $1,000 a month. So you could say, okay, $1,000 a month is the payment, or I'll do a 6-month loan and then you owe $106,000 at the end with no payments. So that allows you to truly get into a fix and flip with none of your own money.
Another option is a HELOC, so that you get a home equity line of credit on your existing house or potentially on someone else's house if they want to be one of your investors, or even if you have a house already as an investment property, there is a potential that you get a HELOC on that too. Again, a HELOC is a home equity line of credit.
Yes.
So let's say, for instance, our house, we bought it a decade ago and we bought it for 180, and now it has almost doubled.
Yeah, about
in value. So we have quite a bit of equity sitting in our house. So if we wanted to, we could use that equity to buy other properties. It's basically a loan against your own stuff, right? So, I mean, you have nobody to, to deal with other than yourself. But again, if you have an investor or a family member or a friend that wants to start investing and they have a good chunk of money as equity in their home, they could get a HELOC and then lend that out to you. Again, a HELOC gives you a checkbook basically to where you can write
Yep.
checks. And then obviously it only allows you to take whatever that HELOC limit is. So typically some banks do up to 100%, but again, we don't like to leverage all of our
Too much.
stuff 100%. So we do not recommend anything being leveraged 100%, because when the market shifts, you could be in big trouble. Ask us how we know. Lessons learned the hard way.
Yes, absolutely.
But yeah, a HELOC is a great option for many, many people. So
Yeah, and it's a way for someone even to get in real estate and do some lending that they might not think of otherwise.
Mhm.
Now they will have underwriting on their end or you for your personal home.
correct.
But it's a little bit lighter underwriting, and it's a loan that can close pretty quick, usually in a couple of weeks. And there's typically very little or no closing costs. So the cost to borrow is very low.
And again, it depends on the type of bank that you use. Typically, traditional banks are a little bit stricter on their HELOCs. We have noticed here locally in our area that, my gosh, my brain just totally went blank. Credit unions, that's what I was going to say. Credit
Okay.
unions typically have better terms for HELOCs. So they have lower credit score requirements. They have less underwriting involved. It's just easier
Yes.
to deal with in our personal experience here locally in our area.
You also may find a few community or regional banks that will do a line of credit on an investment property.
Mm-hmm.
They're going to want to be in first lien position. So if you do have another lien, they'll want you to pay that off, put it in the home equity line of credit.
Which you can do.
Right. But if you don't have one, then they'll go in first lien position, and many of them will loan up to around 65 to 80% even of the current value of that investment property. So just another angle of how to fund your deal.
And then if you clearly have no cash available, like you're completely leveraged on all of your credit cards, all of your houses that you own, if you only own one, if you don't own any and you want to get started, always, always, always have the option of doing a partnership or a joint venture with somebody like us.
Yes.
Or somebody that's even new, but they have the money and you do not, or they have the HELOC opportunity and you do not, or they have
Yes.
the 401k or the savings account or whatever the case may be. So don't just, be like, I'm not having any partners. I'm doing this on my own, because there are ways to incorporate other people into your entrepreneurship and into your real estate business without having them a 50-50, without even having them as a, in your face kind of actively participating in your business.
You would lay all that out in your agreement.
Yes.
Who's going to do what?
Exactly.
Which we have an agreement in another section that we go over in detail, joint venture agreement. So be sure to check that out, and we provide a document for you to a document that's editable that you can adapt for your needs.
And have your attorneys look at them.
Yes. Yes, exactly.
Because all of our documents were drawn up by attorneys, but they were drawn up by attorneys for the state of Ohio. So we always have to say, look at that with an attorney in your area.
Yes. Next, private money. Okay. So someone else may have a lot of cash, or like we mentioned earlier, they may have a self-directed 401k. They may have a whole life policy with a nice cash value in it. And so It may be just an outside person that you meet at a real estate investor meetup. So find someone that has money or someone who brokers private money, right? Negotiate your own terms. We're typically buying 100% purchase and 100% rehab with private money. And a huge difference is we are able to get the draw for section 1 of the rehab project up front. And so say you have a $60,000 rehab price. If you go to a hard money lender or a bank, you cover the first, say it's split into 3 draws.
Right.
You cover the first 20,000 and then you get reimbursed.
Correct.
So with private money, you can get the 20,000 first and then get reimbursed. Or maybe your private money lender will just give you all the money up front. You don't really need it all up front. And they'll probably feel a little more comfortable if you split it into 3 or 4 draws. And then they can get comfortable and see how you do your phases, and you send them pictures and video showing them, hey, this is what's going on. They get to participate in it through your pictures and videos and see the progress. And then that keeps them warm, fuzzy, and happy, coming back to lend you money on many, many deals in the future.
Right. And the best thing to do is, if you have somebody that may have some money that has money sitting somewhere, just talk to them, talk about what your plan is, talk about what you would need. Don't be shy, right? Because if you don't mention it, then the answer is always going to be no, because they have no idea what you're doing.
Yes. People in our mastermind group, at the higher level, we will get on the phone with them and go over some of our deals. So if you're ever interested in that, let us know.
Absolutely.
And we will help you secure those private money loans. Otherwise, we have a little template that you can use if you've done some deals or you partnered with somebody. Then you can show them a little bit about what you've done.
Again, hard money lenders. We talked briefly about that at the beginning of this. There are several out there these days. Always vet your companies to make sure that they're good and solid people. Google reviews, I know, are not always the best, but they are legit at times too. Talk to other people that have used those companies. There's a lot of Facebook groups out there right now that have lots of information in them, and they're strictly informational. So they have, we have one here locally that we just type in, hey, do you know, whatever the case may be, and we get like 10 or 12 different suggestions regarding what that information is. So there are ways of finding out what companies are the best to work with. We personally have used Wildcat and Fund That Flip and Ricasa and places like that. So there are companies out there that are great and that work really well with investors, and that's strictly what they're set up to do.
Yeah, be cautious of the ones that are like, we'll give you a 4 or 5% rate. That's a scam. They're usually trying to collect some money from you up front just to start processing a loan that you don't even need or have or want yet.
Right.
Be cautious of that.
Yes.
So make sure you vet your hard money lenders. Some I've even seen recently down to 600 score.
Yeah.
They're going to limit your loan to value if your score is that low.
Right.
They might cap you at 60% instead of 70% after repair value. But most are possibly down to 620. Quite a few are at 680. But know the terms,
because there are a lot of places out there, that do daily loans too, or weekly loans or monthly loans, and that's just not what you want or need for a flip, because you never know what you're going to get into.
Yeah, so you got, typically the terms we're seeing is that you need 10% down of just the purchase price.
Yeah.
And then they'll provide you 100% of the rehab, but that is refunded to you. as you finish each phase. And you're going to see interest rates typically between 10 and 18%.
Right.
Private money lenders, you might be seeing 8 to 15%. So a little bit lower. Banks are going to be a little bit lower than that, depending on when you're watching this video and what the current rates are. Could be totally different next month.
You never know. That's the exciting thing.
Climbing right now. But typically you're gonna see a 6 to 24 month term. If you've done more than 4 deals, there are money brokers that will approve you with a one-time underwriting for a year, and they'll give you between $1 and $3 million line of credit. So they've underwritten you personally once, and then it's just approving the property each time.
And we have some links in here for some companies that we use. So
yes,
be sure to check them out as well.
Yes, know, like, and trust that we know, like, and trust. So
Yes.
The one thing that can really screw everything up is if you get a bad lender, they can't close on time, and now you're trying to ask for an extension, and now you lose credibility with the seller.
Right.
Now they're mad at you. They may not want to extend. And so we're trying to help you avoid all of those really stressful situations
that we have already taken. Like we've encountered them, we've come across them, I mean, we've pushed through them or we've lost deals because of them, but learn from our mistakes, learn from our experiences, and just make sure that you vet the people that you work with in all aspects.
Yes. We have another video where we share a series of questions to ask your lenders so that you can get a feel for how they do business. And those questions are everything that you need to know to make a wise business decision on what your needs are for your flips.
And then again, you can always go to a bank, right? I mean, banks are there for lending purposes. Typically, when you're working with a traditional bank, though, your credit score has to be higher, especially if it's an investment property. And typically you will be required to put down 20% because it is an investment property. They do not lend to you as if they are lending to you for your personal house. Even if it's a second house, for instance, we have a house in Florida that is in our personal names because that was the quickest way to close it. And it was a second home. So the investments were a little bit different. The down payments were different. The credit score requirement was different. So you just have to make sure whatever bank you're working with, their criteria and that you meet that. And if you don't, then that's not the bank that you need to work with. And that doesn't mean that the deal is dead. You just need to figure out another way to do it.
Right. There's 15 ways to do every deal.
At least.
So, again, this one has more paperwork. It's based on credit, your income, your tax returns, an actual appraisal of the property. Some of the other lenders they might not require anything. They might require a BPO, which is a broker price opinion. So an agent is evaluating the property for them. And so keep that in mind that this is also going to be typically a 30-day turn time. I have seen some community banks going down to 640 credit, but most of them are 680 or higher typically. That's why we want you to call all of the community banks in your area and find out what terms you can get from each of them. Okay. And as of today, the rates would be probably ranging around 6 to 9%. This could be 10 to 15% by this time next year. So just keep in mind that probably want to figure out what your bank's terms are, about every quarter right now.
Yeah, it's changing rapidly. So.
All right, that is the end of this training. If you guys have any questions, please reach out to us. Use the links, and good luck and
happy house hunting.
Happy house hunting.
Hey everybody, it's Jay.
This is Annie.
We are so grateful for you joining us on our podcast and listening in and participating. We want to offer you this additional free bonus. and that is joining our Facebook group.
Yes, where we will have other individuals, not just us, but having conversations on all things real estate, and we would love to have you join us. So just click the link below and head on over and join our group.
Thanks, guys. We'll see you on the other side.